So there's no doubt that uncertainty in the markets, raising clients' expectations, all those kind of things are key topics within the market at the moment. What does the report tell us about how Vitality can help advisors navigate this complex environment with their clients?
Well, I think fundamentally, if we're going to actually grow and expand the protection market, it's actually about meeting the changing expectations of our customers. If you look at the modern lives that they all lead, they're expecting a product that's engaging, personalized, and provides them with value. And fundamentally, I think that's what we try to do for customers and for advisors. And if you once again look back at what the report really speaks about, it really shows how we as an insurance company can provide value from day one before claim through the Vitality program, where customers on average, even on a bronze Vitality status, actually last year received £195 on average through the Vitality program. And secondly, how we're designing a product that's engaging and personalized for them. And once again, if you look at the most recent enhancements that we made to the proposition through Streak Rewards, through personalized steps, and through the range of new partners, it's providing a policy that they want to engage in and get value from.
So Julie, moving to you, if clients are seeing this value every single day, how do you think advisors can actually work this into their conversations?
So often we don't make a decision to buy something because we have analysed all the product features. We usually make the decision to buy something because it feels right. And then when we hear about the details, that just kind of reconfirms our initial decision. And we know this because research shows that we have two ways of thinking. We have a slow and logical way, and then we have a fast and instinctive way. And although we use both of these ways of thinking, when it comes to making everyday decisions, it's usually the fast and instinctual way that takes the lead. And this is really important if we talk about having a mortgage protection conversation, because if you think about it, there's a lot that's going on in a client's mind when they're having that mortgage conversation. They are dealing with solicitors, they're thinking about their moving dates, and there's a lot that's competing for their attention. And so we could probably say that their working memory is full. So it's very unlikely that they're going to sit with an advisor and carefully, slowly, logically analyze all the features of the product. It's far more likely that they're going to sit there and they're going to go, does this make sense? Can I trust it? And does it feel right? And that's why it's important to have conversations with clients that are positive around the topic of insurance, because you want the client thinking to themselves, wow, this is a great product I can get value from straight away. It can even maybe make me live up to 5 years longer. And so when a client is in that positive mindset, what happens is that it's easier for them to make that instinctive decision to say yes to that type of protection. And then when they hear about the details, that just is a reconfirmation of that initial decision.
So that's actually really true, Julie, because if you think about it, if things become more expensive, if they become more complex, people tend to either delay decisions or actually scale back from those decisions.
Correct.
Andrew, maybe across to you. Both of us have been in the industry for a long time, in the insurance industry. But I think from a consumer discussion and a consumer protection discussion, people tend to be quite concerned about those things. So how do we, from a value perspective, how can we help advisors show value to their clients?
Well, I think, to be honest, Justin, I think customers actually have had a right to question the value that they receive from traditional insurance products. They pay a premium for a policy that they may never get a payment from. And actually they pay a premium that's not based on their lifestyle behaviors. So they often question the value and whether it is fair value to them, given that lifestyle behavior is such a big driver of the actual risk on an insurance policy. Obviously, the optimizer is fundamentally different to this, considering it takes into account your lifestyle behaviors to actually reduce your insurance premium. And we're seeing customers respond incredibly positively to this because fundamentally it does three things. The first is it helps to reduce their insurance premiums. And once again, if you look back at last year, the average customer through the optimizer saved about £155 in the first year alone. The second, and probably more fascinating, is that customers don't just take that discount and run. We actually see them purchasing more cover and more comprehensive cover. And if you look at optimized clients, they were actually 58% more likely to take out additional riders on their policy. And the third part that I always point out around the optimizer is that it actually also encourages and gets clients to engage in their policy. So they keep those policies for longer and they get more value from those policies through the Vitality program.
Yeah, that really illustrates how proposition actually comes together, in the sense it's actually around offering lower premiums, better cover, and the ability for a client to look after their health to actually keep those premiums low. Now, Andrew, moving to you, you spoke a little bit earlier about how we're trying to drive or recommend more comprehensive cover. And serious illness cover and income protection form a key component of that. How is the report showing how we demonstrate value?
Well, Justin, if I am rather blunt about it, what the report really highlights is where serious illness cover and income protection would pay out where the rest of the market wouldn't. Now, I think there are a couple of key stats that really illustrate that to me. The first is if you look at last year, 1 in 7 of the serious illness cover claims that we paid wouldn't have been paid by your average enhanced critical illness product in the market. Now, what's actually more interesting is that if you zoom into younger clients, that number rises to 1 in 3. So that really means that for an advisor, there's a 1 in 3 risk that you may actually be providing a policy that the customer wouldn't receive a payment from, which they would have at Vitality. Now, I think a point that sometimes kind of gets raised is, are these unique or payments that we pay out, are they small amounts? Whereas in reality, if you look again at last year, we had an example of a client who received a £90,000 payment for a pulmonary embolism. Now, that's a life-changing amount to help them kind of allow for this change in lifestyle as a result of the illness itself. The second point that I would really pull out is that actually it's not just about the first claim. And I think sometimes people think that actually multiple claims aren't likely, or that if they happen at some point in the future. But once again, if you look at the report, the average gap between a first and second claim was only 4 years. And about 1 in 10 of our claims last year were paid for multiple claims. An example of last year that I think really brings us to life is that we actually had a client who got a cancer payment and only 6 months later was submitting another claim for rheumatoid arthritis, an unrelated condition. I think the key, Justin, is also not just in regards of our serious illness cover that we see these unique payments actually occurring. If you look with an income protection, it's actually about 70% of those claimants would be eligible for our recovery pathways as well, which help them get back to work sooner.
So Andrew, you've definitely shown us about the need and the value instead of comprehensive serious illness cover. So Judy, back to you. Taking these insights into account, how do you think advisors can demonstrate this kind of value to their clients?
So I think discussing certain statistics with clients really does help them to see the value of a more comprehensive plan, a plan that covers more conditions. I think most of us would accept the need to have a policy that covers cancer because that's a common condition. But when it comes to the more unique or rare conditions like rheumatoid arthritis or pulmonary embolism, I think we probably think that our chances are pretty low of getting one of those. And so we don't immediately see the need to have a policy that would cover them, a more comprehensive policy. And so when you are talking to a client, you're sharing the statistic of 1 in 7 claims in 2025 would not have been paid by an enhanced critical illness plan. And that's not 1 in 100, that's 1 in 7. And then that drops, like you said, to 1 in 3 when we're talking to younger clients. And those are the clients that arguably are the ones that are needing the most convincing because of their high levels of optimism bias.
Brilliant. 3 themes and really one message running through all of them. Vitality gives advisors the tools to sell protection positively, to use price as a launchpad for better cover, and to justify a quality recommendation with data. I'm sure this will assist in having better protection conversations and hopefully start to close the protection gap.